Hello and welcome to a demonstration problem for the problems that we didn't get to finish in class. So in front of me I have the handout that I gave you guys in class on Wednesday. So if I were you, I would definitely pull that packet out. And what we're gonna do actually is go through problem 2B. Okay, we didn't have an opportunity to get there. To get through that in class. So we're going to post a video and we're going to basically just walk through this entire exercise. We'll show you how to give you a little bit more practice analyzing transactions, as well as putting together the financial statements. We got to put together the income statement, statement of owner's equity, and balance sheet. Now within that packet you have a template for everything. So let's just go ahead and go through it. So the first one, well, let's pump the brakes here. Before we go any further, if you notice, hopefully you had an opportunity to read the problem, they said that, hey, on August 31st, the balance sheet shows cash has a balance in it of $9,000. Accounts receivable has a beginning balance in it of $1,700. Supplies has a beginning balance of $600, and so on. So what I did was in our template, I went ahead and I put those beginning balances in. Okay, very important. Remember, everything has to be in chronological order. Okay, so we're starting on August 1st. Well, guess what? These balances that we have result because of prior transactions. Okay, so we can assume, actually, we don't need to assume, we know for a fact that we're starting August 1st. July 31st, guess what our ending cash balance was? $9,000. Guess what our ending accounts receivable balance was as of July 31st? $1,700. Remember, one period's ending balance in an account, so let's take cash, if one period meaning July, if the ending balance of July for cash was $9,000, guess what? The beginning balance of cash for August is $9,000. Okay, so just keep that in mind. Okay, so number one, paid $2,900 cash on accounts payable. Well, guess what that means? We paid cash to settle a liability. Okay, so what are we doing? Well, my cash has to decrease, so I'm going to put minus 2,900. And guess what else is decreasing? My accounts payable, because I'm paying that, bear with me here for a second, I'm paying that liability. I don't owe that money anymore. Okay, so guess what? I'm going to decrease accounts payable $2,900. Number two says collected $1,300 on accounts receivable. Okay, so what that means is in the past we provided somebody a service or we sold something, we generated revenue a month ago. A month ago that person said, I'm not going to pay you now, I'll pay you later. Okay, so at that time we say we have revenue, we have a receivable. Okay, we're now in August. Guess what? That person is now paying us. Okay, so what happens? Well, our cash is going to go up because we collected $1,300 of accounts receivable. Okay, that transaction means that we received cash and we can decrease a liability. So I'm going to increase cash by $1,300 and I'm going to decrease my accounts receivable by the same amount, $1,300. Okay, now let's look at number three. Purchased additional equipment for $2,100, paying $800 in cash, and the balance was on accounts receivable. Now, what this means is, and again, we don't need to get creative and start thinking like picking accounts, right? We don't need to do that because the problem tells us what we need to do. We purchased equipment for $2,100, so guess what? Equipment is going up by $2,100. Okay, how did we pay for it? Well, we paid $800 in cash And the balance on account, that means, hey, I'll pay you later. Okay, give me the equipment now, today. I'll give you $800 cash, and then I'll owe you the remainder at some future date. Okay, so our equipment goes up by $2,100. Our cash goes down by $800. And our liability has to go up by $1,300. Okay, now I want to show you something real quick, because you might be saying, I'm sure you're blown out of the water. Well, we got 3 accounts. That's okay. The reason why it's okay is because that's the nature of the transaction. We got equipment, we use some cash, and we put the rest on account, meaning we'll pay them later. Okay, so if we sum up or take the difference between the $2,100 and the $800, that gives us $1,300. So in assets, we have $1,300. In liabilities, we have $1,300. So this after booking this transaction, our accounting equation is still in balance. Okay. Oh, sorry about that. And again, the takeaway here is read the problem, pull out what they tell you. Okay. So let's look at number 4. Recognized revenue of $7,800, okay, of which $2,500 was received in cash, and the balance is due in October. So what this means is, in August, we provided somebody with a service. We billed that person $7,800. We sent them an invoice saying, you owe us $7,800. This person says, great, not a problem. I'm going to send you $2,500 right now in August, and the remainder I'll pay you in October. So let's recognize 2 accounts that we have. Well, first of all, recognize revenue of $7,800. Guess what? I need to increase my revenue account by $7,800. I received cash. How much cash did I receive? $2,500. The rest of it, this person said, I will pay you in October. Okay. We're in August. In August, I have a promise to receive payment. That's a receivable. For the difference, $5,300. Okay? If you add these 2 up, guess what they equal? $7,800. They're assets. We have no liability just in this transaction, but we have our owner's capital, right, of $7,800. The accounting equation holds. Okay, let's look at 5. 5 says, withdrew $1,100 for personal use. Okay, withdrew $1,100 cash for personal use. So right off the bat, we can see that it says cash. It's being withdrawn from the company. I need to subtract cash by $1,100. Okay. Well, the owner took it out. That's going to be an owner's draw. And I'm going to subtract owner's draw by $1,100. Okay. After this transaction, the accounting equation is still in balance. Cash is going down, draw is going down. Okay. Let's look at 6. Paid salaries, $1,700 for September. Also, $900. I'm sorry. Paid salaries for $1,700. Rent for the month of September would be $900, and advertising expense for $450. Okay. I paid these. Right off the bat, it says paid. How did I pay them? Has to be cash. There's no other way I can pay somebody, right? So if I look at 6 and I add up all these numbers, $1,700, $900, and $450, that gives me $3,050. So I need to subtract $3,050 from cash. Okay. Well, all these are expenses. Salaries expense, rent expense, advertising expense, they're all expenses. So guess what? I'm going to expense them. Now, I know we had a lot of confusion in class, but mathematically we need this accounting equation to be in balance. So if I subtract cash, I'm going to deduct 3050 in expenses. Okay? Number 7 says incurred utilities expense for month on account of $170. Now, right off the bat, we have to recognize we did not pay any cash. How do we know that? Well, it tells us that we incurred an expense, okay, meaning we owe for our utilities, but we incurred it on account, meaning I'll pay them later, okay? So that means that my liabilities, or specifically my accounts payable, is going up. So I need to add $170 to accounts payable, and I'm going to recognize the expense. Okay. Now, again, mathematically, we need everything to hold true. Okay. So if I'm increasing my accounts payable, that means I must increase my expenses. Okay. But look what happened here. Okay. And this is where we get thrown for a loop, right? Because my expenses in transaction number 6 was a negative to keep the accounting equation in check, that's good. But in actuality, my expenses are going up, not down, okay? So here in transaction 6, I'm saying my expenses are going down. Here I'm saying they're going up $170. The difference between these two is $28.80. That is not my true expenses, right? My true expenses are $3,220. Okay? So, I'm going to leave it negative, okay, because I need to add my expenses. Now, I know that my accounting equation, oh, yes it is. It is in balance, right? Because assets equal liabilities plus owner's equity, okay? So if I add these two, positive 70 and negative 70, they cancel each other out. So my accounting equation is in balance. Now you might say, well, wait a minute, how come you added a liability but then you subtracted an expense? Well, think about it. They're both on the right side of the equation, right? The equation is assets equal liabilities plus owner's equity, okay? So because they're on the left side, I go up in one, down in the other. That has a net effect. This accounting equation is going to be in balance, okay? So let's look at 8. 8 says received $10,000 from Capital Bank, and they tell us in parentheses money borrowed on a note payable. So basically what happens is we went to the bank and said, hey, I need 10 grand of cash. Bank says not a problem. We're going to issue you a notes payable. Okay, notes payable are different than accounts payable, right? In the sense that, well, first of all, they're both liabilities. Okay, but however, notes payable is a little bit more in depth, right? There's paperwork that goes along with notes payable, right? Normally, if you have a note payable, you make an agreement with the bank saying I'll pay you X amount every month plus interest. Okay. With accounts payable, we really don't incur interest or accrue interest. Okay, same thing with receivables. We really don't charge, normally we don't charge interest on that. But a note payable from the bank, yeah, we're going to pay interest on that. So my cash is going up by $10,000. My notes payable is going up by $10,000. Okay, now I need to I need to total all these columns. So I'm just going to auto sum, and I'm going to get my little crosshairs and I'm going to drag all the way down. So it's going to total all these columns for me. Okay. So now the first thing we want to check is the accounting equation in balance. Well, I know it is. I'm going to look at all my assets. These assets equal up to 29,350. So I'm going to put 29,350 right here. You don't have to do this on your problem. I'm just showing you how the accounting balance holds true. Okay. Actually, I'm going to do it this way. 29,350. 29,350 equals, because those are my assets, my liabilities. Well, I have two liabilities here. I have accounts payable, which has an ending balance of 2170, and a note payable, which is 10 grand. Those together equal 1270. Plus my liabilities, or I'm sorry, those are my liabilities. Now I need to equal my owner's equity. Okay. If I run these, if I add my capital, subtract out my withdrawals, add my revenue, because revenue increases owner's capital, subtract out my expenses, because expenses decrease owner's equity, I should have 1780. Sorry, 17,180. Okay, so if you got a calculator handy, which I'm sure you have your phone handy, add up 17,180 plus 12,170 equals 29,350. So my accounting equation is in balance. Okay, now I want to figure out what my net income is. Well, net income is easy to figure out. Why? I just take my revenues and I subtract my expenses. That's it. So I'm going to say equals revenue of 7,800. Now I need to subtract my expenses, but my expenses are in as a negative, so I technically need to add it just in this scenario. Okay. 458 or 4,580. That should be our net income. Okay, so that's actually exercise, or that's part A of the exercise. Okay, the next thing we need to do is we need to prepare an income statement for October. Okay, so here's what we're going to do. You're going to flip onto the back and you have your income statement right here. Now notice, I want you to notice the heading. We have the company name, we have the name of the statement, this is an income statement, and we have 4-month ending, August 31st, 2001X. It should be 2017, but I didn't want to put the exact year in because I might throw you off. The takeaway here is that the income statement covers a period of time. Okay, it covers the month of, in this case it covers the month of August. When we do the balance sheet, we'll see that the balance sheet is actually like a Polaroid picture. It's like a snapshot. Here are your assets, liabilities, and equity as of one particular point in time. Okay, so think of the balance sheet as a still picture. Think of the income statement as a little video, in the sense that it covers a span of time. Okay, so first thing we're going to do is type in our revenue. Okay, revenue. Well, what's my revenue? Well, guess what? I already figured it out. I can come to my list of transactions here, and my revenue account is 7,800. So I'm going to say equals, and I'm going to go to this cell reference just to link them up, so there's no error or anything like that. Okay, now the next thing I need to do is I need to list out my expenses. Okay, and you can see from based on what we have from our transactions, we didn't specify which transactions we have, right? Which expenses. So I need to go back through my list of transactions on the problem statement or the problem paper, and I need to look at number 6 and number 7. Okay, so I have my revenue. The next thing I need to do is list my expenses. So I'm going to type in expenses. Okay, and then I'm going to I'm going to go down a row, and I'm going to indent, and I'm going to list all my expenses. So the first expense I have from item 6 is salaries. And I know my salaries expense is $1,700. Okay. I'm going to do the same thing with rent. Make sure you do a little indent, and I just click this button right here when you're in Excel. September rent. Rent expense for September is $900. The next expense I have, and again I'm just taking it from item 6, I have advertising expense. And my advertising expense is $450. And then I have one more expense, right? That $170 for utilities. Which was $170. Okay, so now what I want you to do is come down one more row, and you're going to indent twice, 1, 2, and we're going to say total expenses, and I'm going to add this little column up. I'm just going to auto sum it. Boom. So 322, right? Which incidentally are the expenses that I had, is the ending balance of the expense account. Okay, so to figure out my net income, I'm just going to subtract revenues minus expenses. 4580, that's what I calculated up here. Okay, so this is how you put together an income statement. Okay, notice the format. It has to be headed. It has to have a header. It has to have 3 lines. Name of the company, the statement that we're doing, which is the income statement, and then for the time period that it covers. In this case, it's for the month ending August 31st, 2017. Okay, notice how I titled my expenses, and then as I listed them out, I indented them all just slightly. I did 2 indents from the left, and I said, oh, here's my total expenses. I totaled them up. I want to show you one more thing. Because we have a mathematical function here, we need to underline our 3220. This shows the user that, hey, I'm doing some math here. Okay, and we're gonna what we call foot a column, right? We have our column here. I want to show that this is the last, or this is the answer, right? This is our net income. There's no more calculations after this. I need to do a double underline, so what I'm going to do is I'm going to click on my underline, and I'm going to click double underline, and notice what it does here. It gives 2 underlines. That means it stop. Okay, revenues minus expenses. Well, because I have that underline, there's a little mathematical function there. It's 4580. Double underline. Stop. I'm done. That's the net income. That's the bottom line. Okay. Now let's look at, if you scroll down, or on your paper, if you look down a little bit, what we're going to do is we're going to go ahead and we're going to do the statement of owner's equity. Now, just like the income statement, statement of owner's equity covers a certain amount of time, or it covers a period of time. So the statement of owner's equity is more like a little video than a still picture, okay, because it covers time. So the first thing I need to do is I need to say, okay, what's my owner's capital at the beginning of the period? So I'm going to say owner's capital, and I'm going to say August 1st. Okay, now we know what the beginning owner's capital is. Okay, there's two places we can find it. Number one, we can go back to the problem, and it tells us Peter Nimmer operated a veterinarian business in Nashville, Tennessee on August 1st, 2017. On August 31st, the balance sheet showed the following. Owner's capital, $13,700. That's the beginning balance. Okay? Yes, that is the beginning balance. So I'm going to go ahead and just plug that in. Okay. Just bear with me here. I apologize when it comes to like spreadsheets. I'm so anal with it. I realize that. Okay, so we need to think what increases owner's capital, what decreases owner's capital, right? Well, we're going to add to this beginning balance any investments that the owner made. And we're also going to add cancel. Oops. Bear with me here, I apologize. Okay, so we're going to add investments, and we're also going to add net income, because net income increases owner's capital. Okay, so did the owner, and let's go up and look at our transactions, did the owner contribute any money? Did he make any additional investments? Okay, now I'm going to go ahead and assume that somebody is thinking, well, yeah, he invested money. He invested $10,000. Yeah, he really didn't invest $10,000. Okay, that $10,000 was a note payable from the bank. So the business actually took on that that loan. That wasn't the owner putting his own money in. That's what we're saying when he makes an investment. We're saying he puts his own money in. He did not do that. Okay? So, we know we have 0 investments, and we're okay with that. So I'm going to go down here, and I'm going to go ahead and say 0 to investments. We do have net income. The net income flows from the income statement, $4,580. So what then is the total additions to our net income? Well, we're going to sum up our investments in net income. Remember, I'm doing a mathematical function here, so I need my little underline, and I'm going to sum these up. The beginning capital plus the net income gives us $1,820. Okay, then we need to subtract out any drawings or draws. Okay, did he take out any money? Well, I remember, yeah, we took out $1,100. But if we don't know, we can go back up to our transactions, look at the draw account and see, oh, yep, took out 1,100. So I'm going to plug that in right here. Okay, going to do another, sorry, going to do another mathematical equation or mathematical function here. So I need my underline to show that I'm doing something. Because draws decrease owner's equity, I'm going to subtract this out, and I get 17,180, which is my total owner's equity. Okay, which we know that. Now the last thing we need to do is our income statement, or I'm sorry, our balance sheet. Now, just like our balance sheet, we know, bear with me here for 1 second. Darn it. There we go. Much better. Okay, so we're doing the balance sheet. Remember, it's always assets minus, or assets equal liabilities plus owner's equity. Okay, so we already have our assets. We already know what they are, right? First we have cash, then we have accounts receivable. I'm just going to abbreviate and say AR, if that's okay with you guys. What else do we have? Well, we can look at our problem. We know we have cash, accounts receivable, we have supplies, and we have equipment. Now we need to put the ending balance, right? So that means we need to go back to our transactions that we booked, and we need to add all these up. Okay, so we know our cash, I'm just going to read these off. We know our cash was 14,950. Oh, we know the ending balance of accounts receivable was 5,700. We know the ending balance of supplies was 600, and we know the ending balance of equipment was $8,100. Okay, and again, we can go and look and just make sure we have all the right numbers. I know we do. So I need to total up my assets here. Okay, so I'm doing a mathematical function. I'm going to underline that number, and I'm going to sum up all my assets. My total assets equal 29,350. I'm footing this column, meaning I need to show that, hey, this is the ending number of my total assets. So to do that, I'm going to double underline. Okay, I do the same thing with my accounts payable. Well, what are my accounts payable? Well, all I need to do is just look at the ending balance of my transaction and notice that my accounts payable is 2,170. My notes payable, I took out a note for the bank. That's $10,000. I need to add up my total liabilities. So I'm going to underline my 10,000, and I'm going to auto sum, and I have 12,170. Okay, I'm not going to put a double underline here because there's still numbers that come after this. I need to add in my equity, right? So what is my owner's equity? What's the ending balance? Guess what? I can go right to the statement of owner's equity and pull out the ending balance, which is 1780. 17,180. Now I'm going to do going to do another mathematical function. I'm going to add my liabilities. I'm going to add my liabilities to my owner's equity. and I'm going to double underline because this is a total. Nothing's going to happen underneath it. So to make sure I'm right, total liabilities and owner's equity is 29,350. Total assets 29,350. The balance sheet is in fact in balance. I'm good. Okay. Keep in mind the balance sheet, remember, is a picture, right? It should not say 4-month, or it should say 4-month ending. Or I'm sorry, it should not say 4-month ending. I need you to change that for me. It should say August 31st, 2000. I can change that to 17. Okay, so this shows that this is a balance. This is a point in time, and that's it. Okay, so keep that in mind. I apologize, I made the error on your template, but there you go. If you have any questions about this, please text me. Totally not a problem. I'd be more than happy to answer any questions that you would have about this problem we did in class. You now have a template to do all your homework. Again, if you have any questions, please let me know. All you got to do is send me a text. I'd be more than happy to help you out. Thanks for tuning in, and we'll see you guys on Monday.